Hi everyone, delonewolf here. Welcome back to ETH Talk, your weekly look at the market in ETH Online. And this ETH Talk is just under 2 weeks before ETH Vegas starts, and I think that's what we should keep an eye out for at the moment, because in ETH Vegas, CCP should provide us with a lot of information about those future plans, that roadmap that they've given. A really big one is also going to be the capital and super capital rebalance. I think that's an important one to keep an eye out for. And there is, of course, more information on the citadels. I definitely want to know more about those. So yeah, I think at the moment the market may be decently quiet because a lot of people will just be looking forward to ETH Vegas, and that's where a big shakeup could happen if CCP comes out with some really crazy stuff. Of course, we are here for the market at the moment, so let's jump right in here at 1 minute 100 with plex, and unfortunately that's not really good news. You can see that plex is coming back, 5-day moving average crossing the 20-day moving average. So it looks like this decrease in price here was probably only due to the plex sale that CCP had going, possibly a small CCP intervention on the plex market, that's possible as well, or a combination of those two, but it is short-lived, unfortunately. I was hoping to see plex go back lower. If it ever reached below 1 billion, I think I would move in pretty massively, but so that did not happen. We didn't even reach 1.1 billion on the chart right here, and currently sellers are at 1.205 pretty much billion ISK, buyers 186. There is decent supply. If we look here, all of this is less than 24 hours old, so I guess pretty much at 1.210 is where people said, okay, I'm actually going to try and sell plexes as long as it's above 1.2 billion. So there is decent supply coming in, but is it going to be enough to stop this increase in price? That's actually a major question, because I see two possible scenarios. One, people consider 1.2 billion the current price for plex, and so from here out we could see the chart just going sideways a little bit, of course going up and down, but a sideways movement at around the 1.2 billion mark. That would be an indication that this was just the plex sale doing the decrease in price, and that the market is going to look for stability after that. Another possibility is that it was a CCP intervention, that this has not helped, and that the momentum that we see here over the 6 months going from 0.8 billion to 1.25 billion actually still has to be continued, and that would mean that we could see 1.25 again, then 1.3 billion even. Of course, considering the amount of time we would still need, we'd be right there at ETH Vegas, I think, where we could get new information. So it's really interesting, but at the moment, considering how violently plex have gone back up here, I don't see a scenario where we're going to go back lower in the short term. I see either of the other two, either sideways movement because people consider 1.2 billion a fair price for plex, and thus people try to sell them and are willing to buy them at those prices, or we have a ways to go in the increase in price here, and then we could go a hell of a lot longer if we have to basically ignore this decrease in price here, continue to draw the chart up to this point, and yeah, we'll be going back up to 125 and 1.3 pretty soon, which would be decently worrying, because 1.2 billion is already quite a bit of effort to plex your account on a monthly basis, especially if you have multiple accounts. Next up, multiple pilot trading certificate. That one is trying to do the same thing, going back up, but it's quite a bit slower and lower than the plex itself. On the other hand, 1.142 for the buyers, so quite a bit lower than the buyers of plex, but 1.240 for the sellers, quite a bit higher than the plex as well. So I think it's just because this market is much smaller in volumes that we need a bit of time for the charts to actually catch up to what's going to happen. And it could go either way when it comes to the multiple pilot trading certificate, but most of the focus is of course on plex. The interesting thing is that the margin, the bigger margin, is right here, of course, in the trading certificate, And so if you can make trades on this, then you're bound to make even more money for short-term trades than you do on Plex, which is I think pretty interesting. Pilot's body risk up next. Well, it went up to 2.6, but it's actually going down. It's almost doing the opposite of Plex and the trading certificate here, whereas Plex has corrected back up. This one seems to be correcting back down a little bit. So it really does show that the body risk up is its own little market, and there is no real correlation to be found between it and the Plex markets. But I think it's okay to keep it in here, just something to keep an eye out for as well. It could, for instance, be an indication about how successful CCP is with the vanity items, because if people are interested in resculpting their bodies, then they're bound to buy clothes and stuff like that for them as well. Although what I would like to know is a bit of information on the actual ship skins. That would be awesome if we would have some numbers on that. Moving on to minerals then, 6 minutes. Wow, I definitely took my time there, but okay. Good news for the miners here. Look at that, titanium going up to 6.2 ISK, and the sellers are at 632, 633 when I was making the ticker here, 6.2 for the buyers. So we're definitely still going up. There is decent supply coming in, but look at that, there is really decent demand here as well. The sellers are in the range of 100 to 200 million units. Here is a bigger one of almost 400 million units. The big buyer, which is like 20 minutes ago, 1 billion units, please. And here we've got another one wanting to buy 1 billion units like a day ago at 592, jumping to 618. That's quite significant. So I think that titanium has even more momentum behind it at the moment, strong demand. And yeah, I think, as I've said, that right now all eyes are focused on eVegas, because the capital ship rebalance could be huge, and the information on citadels as well. And well, those are some really big items to make in EVE Online. And so if it turns out that you need all the minerals for that, then that is part, this increase in price here could definitely be fueled by speculation on, okay, minerals are definitely going to be the item to have when people are going to want to build capital ships, are going to want to build supers, and are going to want to build citadels. So that's the theory I've been working on, or I've been standing behind for quite a while now. Looks like it's actually going to be working out okay, if I'm correct. Here is Pyrite then, a bit more hesitant, going up to 11.6, but you can see that it knows some small corrections, and then it's actually still going up ever so slowly. So my guess would be that there's always a couple of people that are willing to dump some bigger stocks of Pyrite on the market. Here we've got 36 million, 86 million, 180 million. On the other hand, this really big order of 1.6 billion units, that's already quite old, is what's been supporting the price of Pyrite. The question is, will demand be able to pick up enough right here? So will we actually see big numbers coming in here to buy Pyrite? Then we could go higher again. Are we, on the other hand, going to start to see this really decline in volume? Then Pyrite could be a little bit in trouble. So this one buy order here is actually really important to determine what's going to happen to the Pyrite market next. It's what's been able to sustain the increase in price, but how long can it keep doing that? We need more demand for Pyrite. Or if you think like me and you think that minerals are going to be needed in vast amounts when all those changes hit, then this could be a good investment. Next up here we've got Mexalon. That one is mirroring the titanium chart quite a bit better. So going up to 70, what are sellers at? 72.31, 15 million here, 18 million here, 17 million here, 40, 50 million. So probably around, what would that be? 100 to 150 million units. On the other hand, here we've got 22 million, 19 million, 23, 25, 58, pretty decently balanced supply demand situation, despite the fact that we've gone so high so quickly. So maybe Mexalon has still some momentum behind it, but at this point you should start to be a little bit careful, of course. You never know when this is going to either turn around or just stop increasing in price. But I don't honestly think we'll see a major pullback anytime soon. Mexalon back at 72 ISK, not bad for the high-stick miners once again. Here we've got Isogen finally reaching the 125, in fact just straight up crossing that, a bit more hesitant once again. As you can see here, there are some slight pullbacks. The 20-day moving average though shows a decent momentum. So let's take a look at supply demand here. Recent orders, sell orders, still not that many. Here we've got one of 9 million units, 9 million units, 4 and another one. On the buy order side, 5 to 2, so not that huge either. Is there like a major order that is here we do have 309 million units 64 days ago once again. That is probably helping to maintain the momentum. The buy orders above that are decent, honestly. Here we get 7 million, another million, considering that we get some really small sell orders on this side. I think it's okay for Isogen. Of course, what we have to look out for when it comes to the high-stick minerals is that the market will at some point find its price, and that could be at any time, of course. If you start to see those big buy orders decline in volume, that means that, yeah, we're probably there. It's probably going to stop at some point. If on the other hand you see new demands coming above that again and again, then high-stick minerals could still have some legs. It's pretty interesting market at the moment. Next up here we get Noxium, and that's pretty damn bad news that Noxium is really correcting back, reaching its bottom once again. I would say close to 470. What are the sellers at? 474, 462 for the buyers. Those are definitely really good numbers for Noxium at the moment. I'm just not sure what is causing this Noxium to behave completely differently from all the others. It's at the bottom of 6 months. So I would again say that this could be a good investment if as I expect, minerals are going to be in really big demand due to the upcoming changes in the game. Let's take a look at Megasite here. It went down just a little bit over the week. But it does look like 1400 is going to be a pretty hard floor that's going to be difficult to actually break, especially on the seller side. So 1464 for the sellers, 1412, 1413 for the buyers here. It's slowly finding its price. Despite that, we still see huge numbers coming in here. 20 million units, another 4 million here. Look at the buy orders, much smaller. This is still putting some pressure on the price. I think that what could be a very strong indication also for the high-stick minerals is if they don't know another really big drop-off, then that could mean that we're finally finding the new stable situation for the mineral market in general. Here we see Zydrine going up a little bit, I would say, over the last week or so, but nothing too drastic. This could be considered normal market variations, both for Zydrine and for Megasite. What I'm worried about for Megasite is that those big orders right here, much more supply than demand, putting pressure on that. Let's see if there's something similar in Zydrine. Yes, here 12 million, 8 million, 3.2 million. You've got a couple of orders right here of 4 and 2 million, but I would say there is still more supply than demand. The pressure is still on for Zydrine as well, so be a little bit careful when it comes to these. If you see those drop off quite drastically again, then it's definitely the case that Nosek is mining way too many of them for the current demand, and then that could have its impact on the high-stick minerals as well. But at the moment, high-stick miners I think are rejoicing because they're definitely getting a bit more bang for their buck at the moment. Every hour they spend mining Veldspar, Plagioclase, stuff like that is definitely better spent now than what it was. Let's take a look here. Over the summer, I would say. Over the summer it was pretty bad. At the moment, you're doing quite a bit better. For the null-stick miners though, there's just so many of them out there, probably because alliances want to keep their indices up. They need the activity there, which is putting quite a bit of pressure on these minerals in the trade hubs at the moment. Let's see if there's a visible impact on Tech 1 ships next. 1430 for that one. Let's take a look here. We'll start with the Armageddon, which is up to 202 million, but you can see here is obviously stabilizing at that price. Let's see if there's some big supply coming in. Nothing too recent here. We've got 5 of them. So honestly, Armageddon, it would be okay, I think, to produce them and to bring them to the market. At the moment, we're definitely at a high point if you look at the entire 6-month chart here, but it's nothing too exceptional either. So I don't expect a big flood of Armageddons just yet, and a correction back towards a lower medium price. It looks to me like the Armageddon at around 200 million is just what it's going to be at the moment, and we could see a little bit of supply coming in, but I don't expect a big flood, because maybe if we had like 206, 208 million on the chart, then there's obviously some people that are gonna want to take advantage of that, but here it's just not high enough at the moment. Here's the Caracal then, sitting at around 12 million. 12.3 for the sellers, 11.2 for the buyers. Also not that much supply. I think the market is still trying to recover from like 2 weeks ago, where a lot of them were just gone. Weirdly enough, here's Dominic's going up in price towards 206 million. Are we seeing a bit more supply of that? Yes, we are. This is what I was expecting, honestly. There is still strong production, but 44 Dominic's is coming in at 207 million. Here another 49 2 days ago. People are trying to take advantage of the Dominic's being a bit of a standout when it comes to the higher price that it's selling for at the moment. But that does mean that this will correct back towards a more normal price pretty soon because of that increased supply pressure. Here's the Drake then, coming off of a spike up to 60 million, back down to 55, which I think is pretty normal. And here again, we can see the response. Quite a bit of this is less than 24 hours old. Here we get like around 15, 16 Drakes being brought to the market. A couple days ago, we have another 30, another 10 here. So when Drakes went up to 60, the industrialists saw their opportunity, but now that correction has happened here. Here's the Mauler then. That one has been really stable at around 11 to 11.5 million. It's right in the middle of that. So I suspect that it could be empty of those. It's a bit weird, you know, you've got 12 million, which is around here on the chart for the sellers. You could bring a couple of Maulers to the market, but of course it's not that big of a markup at the moment just yet either. So that big order is causing Maulers to stay really stable, despite the fact that we're pretty much out of them at the moment. I think, again, this is similar to the Armageddon. We'll see some Maulers being brought to the market, but it's not as good an opportunity as what the Drake was or as what the Dominic's is at the moment. So I don't think we'll see major supply coming in and a major pullback of the price either. Next up here, we've got the Myrmidon. Again, nice spike up to 60, coming back down. So we should see much more supply of these. Exactly. So this is the Tech One market showing that it's alive and well. The question is, in a few weeks time, will we start to see all of the other supply gaps being filled? Hopefully. Personally, I hope. I do like to see a stable Tech One market where people know what to expect. So hopefully this will start to plug in after, well, like I said 2 weeks ago, where a lot of them were pretty much bought out, and then showing the resilience of the Tech One market over like a few months would be really nice, I think. But at the moment, there is some weird stuff going on, granted. Here's the Oracle spiking up to 90 million, probably on another buyout as well. But you can see that supply is coming in, taking advantage of that. 36 of them, like a few hours ago. Here, all of that coming in competition in the last 2 days or so. The machine needs some time, of course, to plug a gap of the size of what we saw happening 2 weeks ago, but I think it is slowly happening. Here's the Raven though, weirdly enough going, oh, actually not weirdly enough, going up to 200 million. We saw that last week actually. 200 million is just a more normal price for battleships. You can already see the response here as well, with 50 and 27 of them coming in. I guess people also do watch the historical charts. Going from 180 to 200 is a better opportunity to make some profit than something like the Mauler, for instance, or the Armageddon, which is which has been around this price for quite a bit, which is why we're seeing again the supply of Ravens come in quite drastically. Some of the other ones not yet, but as I've said, I think this will stabilize, and in the upcoming weeks we'll start to see reserves on the market for all of the other ones as well. Here's the Stabber, and little spike up to 11.2, being the really stable one at 10.6 in the last few weeks and months. Now, well, actually it's already back down here to 11 million. Decent supply here, another 15 coming in, so I'm not too worried about this one data point. I actually think that will bounce off of the 11 million pretty soon, except for, as I've said, this is not such a great opportunity yet. So we could see a timid response, and so a slowly going down after touching 11 million. It is possible that will settle just that little bit higher. Next up here we get Tornado, another nice little spike up to 80 million. Supply response, right here it is, 19, 47, 19. Honestly, this is a lot of material being used as well to plug these supply gaps. And people are targeting, of course, the better opportunities. This could be part of the impact for high-tech minerals being higher all of a sudden as well. Part of this could be that. So if you... This could be a valid theory, and I'm thinking about it. And if you subscribe to that, if you think that this buyout of pretty much all of the Tech 1 ships that we saw a few weeks ago is what has helped spur a final move up in mineral prices, because people need to produce stuff to plug those gaps and try to get to those higher profits, then that could mean that in a few weeks, if we see supply back for all of the other ships as well, you know, if we see full pages for all of the other ships as well, then you could expect a pullback for minerals at that point. It's just something I'm thinking about right now, and I'm giving it to you guys, although I subscribe to the fact that we'll see really big demands coming in after with citadels and the capital super capital changes. Next up here we get the Tornadoes bouncing off of 80 million once again here. Supply, oh, that's what we actually just saw. Here's the Typhoon then, 184 for the sellers. There's 38 of them coming in, which is pretty decent. But again, if you look at this chart, this is not the best opportunity, and this is, I think, why we're seeing not that many Typhoons on the market at the moment compared to the Tornado. Much bigger spike up, much better opportunity to get more bang for your buck, and so this is where industrialists are focusing on at the moment. And then here we've got the Vexor coming off of 13 million, which was not that bad, I think, and you can see the supply response here. The Vexor is not that difficult to actually bring to the market in really big numbers. So here we got 87 of them, another 50 being brought in. So there is really big supply for the Vexor, which did go substantially higher. It's also a cruiser. It's quite a bit easier to make Vexors than a battleship. Next up, we've got the Tech 2 markets, 22.30 for that one. Let's see if there's some trade opportunity or maybe some volatility to be seen. Basilisk, unfortunately, I would say the 185 to 200 million price band, it's just right in the middle of that. I would not make a move on this. We did see some nice volatility here. Still opportunity at 230, buy opportunity at 175, and then another one here at 215. It shows that this market is alive, but right now everything has just slowed down, and so I'd be careful here. Next up, we've got Cerberus dropping pretty low. Sellers below 190, really, yeah, 186 for the sellers, 183 for the buyers. This is coming into interesting territory, I think. We start to see data points very close to 180, and that is dangerous. That could be a trigger for some volatility. Cerberus very low. If you're looking for a medium term trade, I would say, because short term you never know. The volatility has not been there, but this could be decent for medium term. Next up here we've got the Enyo going back up a little bit to 23 million, but again it's just too stable, these assault frigates. They could get a bit of a bump because CCP is talking about no longer allowing the Tech 3 destroyers in the smallest faction warfare outposts. They've really pushed out the assault frigates there, and so I'll keep them in here on the expectation that when that change hits, interest into the assault frigates might become higher. But at the moment it's just too low. There's not enough volatility to say that, okay, this is a good trade opportunity. Here's the Guardian then, coming off of a spike, unfortunately currently sitting at 140 on the chart. It's too early to do either. You know, you don't want to sell Guardians at this price. You don't want to buy them at this price either. The buyers 134. Which is around here on the chart. No, you need that to be like below 130 or something like that before you can say, okay, make a move on some Guardians. Here's the Hound, working its way up. That's pretty nice. So you could have bought them close to 16, I suspect, on the buy orders, but now it's already up to like 19 million. Quite a bit coming in on the market, but that was a good sell opportunity right here. So if you've made a move on the hounds here, you could try to sell for a decent profit. Next up, we've got the Ishtar coming off of a nice double spike above 175, buyers 161, sellers 168. So unfortunately, the opportunity is passed, but it was pretty decent, which in my book is quite unexpected because of the Ishtar nerfs that are coming in at the moment. It's really been in the crosshairs, but it's still doing quite okay. Next up here we got the Manticore. Ooh, that one is dropping off quite drastically. Do we have buy orders below 20 million? Just above that. But there is really big supply, there's not that much demand. Still, if you're looking for that longer term trade, this could be a really good one. Considering that we've seen Manticore spike up to 32 million here, you can sell them for 25 to 26 million. There's definitely a good opportunity to do so. You can pick them up for around 20 million. That's 1/4 of the price increase that I think at some point in the future you'll definitely be able to make that money. So Manticore I think could be interesting for, that's definitely longer term though, keep that in mind, because there's huge supply here at the moment, huge pressure, so that's not going to be a trade you'll make next week, but longer term could be interesting. Here's the Nemesis then, sitting at 19.5 million. I don't like it either way considering the rest of the chart, so I would say no on that. Oneros, lovely spike up. I think I noticed that opportunity when the chart hit 140 right here. I said that that was definitely a buy opportunity, currently selling for 168 million. So that's, I think, around 25 million is in profit on every Oneros that you could have made if you'd keep up with the market closely. I think I definitely noticed that one, although I did not move on it personally, just because I've been busy with other stuff in EVE Online and out of EVE Online at the moment. It's definitely a great opportunity. You can sell Oneros for a really good price, and just like 1 week or 2 weeks ago you could have bought them close to a bottom of 140. That's pretty damn good here, showing off that keeping around the Tech 2 market does pay off. Next up we get the Purifier, honestly just below 20 million. What are the buyers at? 18 million, could be interesting, although we've seen them lower, so I'd be careful here. Next up we get the Scimitar. That unfortunately I would say is not that good of a chart for anyone that wants to make a gamble on them, because it's coming off of a stable period. It's at 145, which is not that weird if you consider the Oneros right here, but it's actually at a high point in the last 6 months, so I'd be careful when it comes to the Scimitar. Finally here we get the Vengeance, nice little spike up. That could be speculation on the changes that I've just said, where the Tech 3 destroyers will no longer be allowed to use in the smallest faction warfare sites. Something like a Vengeance, of course, can make its can be really useful there. So that one goes from 19 million current sellers, 23, 24 million. That's not that bad. That was a good trade, but this is, I think, an outlier in the assault frigates because of the announcement by CCP. And so I'd be careful on the assault frigates. Honestly, I would not make a move at the moment because everything will already have been calculated, and I just keep an eye on it as they find their place back in faction warfare. Maybe they're used up a little bit. Will we see more volatility? It is possible, but at the moment I would not be trading in assault frigates. Next up, the Tech 3 markets, 28.30. Yeah, this is gonna be a longer EVE talk, but alright, let's make it a good one. Let's see here, Confessor going up to 54 million. Yeah, that's actually quite a bit. If I'm not mistaken, part of this could be that, have I read that they change it or are planning to change the amount of money you get back from losing one, so the insurance money on this. It was like really high before, and they're gonna cut that back quite a bit, meaning that it's going to be quite a bit more expensive if you lose a Confessor. And with this increase in price, yeah, a Confessor could become a bit more expensive, which honestly for 35 million, which we had before, was just really cheap for the amount of ship, the amount of ability that you got out of these. So I think it's not completely unnatural that they're going up in price. I think that CCP would like to see them a bit more expensive, but we still see a really big supply of them despite that. So despite the fact that we see this price go up like this, supply is still holding up very strongly. There's still a lot of these ships coming to the market, which is normal in the sense that, of course, higher prices, people want to sell at higher prices, but it's strange that there's big supply and big momentum on the increase in price here. So that is the weird thing, which could indicate some sort of manipulation. Here's the Hecate, currently going for 46 billion, so dropping back a little bit. Let's take a look how low we have to go until we find something that's older than 24 hours right here. So as you can see, that's really a lot of Hecates being brought to the market, trying to take advantage of prices close to 50 million. That's putting that pressure on. We'll see if, like the Confessor, this one goes back up, then I think there's something up. With the Tech 3 destroyers. Here is the Jackdaw, spike up to 55, going back down now. Look at that, 100 of them, 64, 18. I mean, these are really big numbers here, another 150. So it's looking like they're pulling back a little bit. The question is, will this continue? Will this also translate in the Confessor pulling back, or is there something more going on? I think it's interesting though. Here's this Vipul going up to 56 million. Decent supply coming in, as you can see right here, 210, 108, 50, 48, 36, 34. The order less than a day old, less than an hour old, in fact. So big supply, this, and then this price spike up here. We should see a major pullback on pretty much all of them. If that does not happen, I think there could be some cartel or something that activity behind keeping these prices high despite huge volumes. Next up, let's take a look at the cruisers. Here's the Legion. Oh, that is not bad, going up to 220. So the Legion doing what the Tengu has done like a few weeks ago. That's pretty high. Are we empty of them? Well, they are coming in, of course, so that seems to have happened like 2 days ago, and people are starting to come in. But if you have legions, if you can make legions, I think it's a good time to try and bring those to the market. I think the pressure will be on by next week and will start to go back down, but that's a really big increase in price in just a few weeks time, going from 170 up to 220. That's not bad for a sell opportunity right there. Here's the Loki doing something similar. So yeah, this Tech 3 mark, something is happening to it. And I think at some point in the future we'll have more information on it. But the Loki going up to 224 for the sellers. Lovely spike up here once again. Then we've got the Proteus coming off of its spike. So again, a spike up to 220, coming back down. What is it looking like now here? 216, but you've got 25, 39 of them. Really decent volumes coming in. So there is that pressure on the price. I don't think we'll see a repeat of that, because here you can see the Tengu, that Tengu's tried again, but it is slowly going down. Is there the supply pressure? Yes, there is. Look at just the volumes here are pretty big, although there's not that much new supply. Well, there is some here, some there. It's a little bit scattered. So the Tech 3 market, it is weird at the moment because we keep seeing big volumes coming in, we keep seeing price spikes up, and personally I do think that there is something up with people that hold like a big percentage of the production when it comes to the Tech 3 market in general. But if you are in that, if you produce them, if you have speculated on them, if you've bought them, there are probably really good opportunities to sell at a major profit at the moment. And then finally for the extra products, 33.35, I'm going to take a look at the capital ship components. The reason for that is it was an interesting post on Reddit. Where is it? Manufacturing and research, standard capital ship components, and it is a rumor, so don't take this as fact, but the rumor was that a CSM member has been telling his alliance members to stop selling their capitals and super capitals, so he might have had some inside information that the changes would be really good. And so I want to see if we see an actual impact on the market here. And you can see though that that they were depressing all the way down to 7 million for the capital armor plates. Now they're back up to 8.5 million, so slight jump up right here could be an indication that something is up indeed. Capital capacitor battery though, previous spike, which is not entirely outside the realm of something of like a short-lived spike, a little bit of local market manipulation, but too early, I would say, for a CSM leak, and then coming back down towards 9 million, which is honestly not that out of the ordinary considering higher mineral prices. For instance, here's the capital cargo bay, pretty stable right here, so I'm not seeing anything drastic. Here's clone vat, not doing too hot. I actually think that this is tied to the Rorcal having lost all of its uses. That could be interesting if the Rorcal does find a big use with clone vats or something like that. That could be interesting. Although they're used in all ships, I think. So yeah, that definitely does indicate a speculative bubble or speculative market increase in price or something like that. Computer systems decently stable as well. Construction parts really stable too. Corporate hangar base, those definitely went up from 7 to 13 million here. I would expect to see a general slight increase in price due to the mineral price increase here, but this is quite big, honestly. Capital corporate hangar base, I think it could be a good time to produce those, because you're bound to make a decent profit on the blueprint copies from these, I think. Doomsday weapon mount, that's something really unusual, of course. Capital drone base here starting at 6 million, ending just above that with a little dip as low as 3.5 and a spike up to 8.5. But honestly, this is nothing out of the ordinary, so I'm not really seeing like a CSM leak major impact on the market or anything like that. Capital sensor clusters did know another little spike here, but from 9 to 11 million. It's really not that big, so I would say that it's still looking pretty stable here. I'm also not seeing the really big die-off of the capital market or anything like that either. It's been able to, at least on the components part, maintain itself quite nicely, and so I guess that we'll just have to keep an open mind, keep an eye on eVegas and see what changes CCP is planning to do for the capitals and the super capitals, and depending on that we will be able to make a move, I think. But at the moment it doesn't look like we have some preemptive strikes or anything like that going on, at least not in the capital ship component market. So there you go, guys, that's it for this week's EVE Talk. Thank you very much for watching, and as always, I'll see you guys next time.